Hi, and welcome back again to Tim Bigham's Big Time Options, Edges and Hedges. Taking a look today at three reasons to be a little bullish or certainly somewhat less bearish on strategy MSTR, the crypto related stock that has been absolutely taken out to the woodshed. So, as always, we like to take a look at a fusion approach, looking at fundamental, technical, and most importantly, probably IV analysis. So let's jump in and take a look, shall we? First of all, from kind of the fundamental standpoint, right? This is the fear and greed index for crypto, and MicroStrategy, in essence, is a crypto company, right? They have a big holding of crypto, right? But you can see that oversold conditions offer potential buying opportunities very similar to the CNN fear and greed index for general stocks, right? But reaching basically about the lowest level you can. So certainly getting fearful. And as Warren Buffett used to like to say, be greedy when others are fearful out there. As we said, Bitcoin holdings of strategy are almost 714,000, right? Or about $51 billion. So they continue to just accumulate Bitcoin, which for a long time was working fine. Bitcoin has been hammered, and for a long time, MicroStrategy holdings were trading at a discount to the price of the stock. But with the recent drop in Bitcoin, and especially in strategy now, right? It used to be MicroStrategy. We're now seeing it trading at a discount. So, in essence, the market cap of strategy, right, is less now finally than their value of their Bitcoin holdings. Bitcoin holdings just under 51 billion. Market cap, depending if you go diluted or non-diluted, somewhere around 47 billion. Here's a one-year comparison chart, right? You can see earlier in the year, MicroStrategy was trading at a premium to Bitcoin, right? And had been for a while. Then, once we saw the sell off take hold, right, we can see now that MicroStrategy is trading at a big discount, right? And a biggest one we have basically seen in a very long time to Bitcoin. So MicroStrategy looking fairly cheap. So if you're a little bit bullish or at least neutral on Bitcoin, MicroStrategy is starting to look good. A longer look, right? Here is a longer term 5-year chart, and you can see that MicroStrategy, here's where I talked about trading at a huge premium. It's Bitcoin holdings to the price of Bitcoin as they were really pumping up MicroStrategy. But you can see strategy has absolutely got annihilated, now trading at about a 15% discount over the past 5 years, the biggest discount we have seen by far. So that kind of favors going long MicroStrategy versus Bitcoin here, looking for a continuation perhaps of the recent one-day rally in Bitcoin. As we said, we like to take a look at the technical analysis. You can see MicroStrategy or strategy, I continue to refer to it as MicroStrategy, strategy once again reached oversold conditions, certainly hit 19 on a 9-day RSI basis, basically the lowest level over the past year. MACD also got to recent lows, right, and the lowest level we've seen in a long time. Bollinger percent B went deeply negative. IV shot to the moon and then finally pulled back here. You can see previous times when all these indicators kind of aligned in a similar fashion, right, especially back here, right, mark significant lows in strategy stock. And you can see the last two times IV spiked, right, and then dropped back like it just did, right, also marked significant lows in the stock. And I think that maybe, we're not going to get a rip-roaring rally, but the lows are in, and IV is still high. We'll take a look at that in a second, even with the recent pullback, which means you can get further out of the money for a nice net credit on the trade we're going to recommend here. And from an IV standpoint, as we said, here's the IV on 120-day options. That's basically we're looking out to June on our trade. And you can see we had that huge run up, right? And then the pullback, and this was earnings related as always, right? And you can see here's the last two times. And as we looked on the chart, that we saw this kind of pullback from the spike in IV did mark lows in strategy. So we look for that to happen. Again, we're finally seeing IV soften as from Thursday to Friday's close, right? Here's Thursday's close, here's Friday, pulling back here, but IV still rather high, right? Here is that huge spike in IV that we saw on the chart here, right? And here's that pullback, but it's still well above the pre-earnings level, right? Where it was trading basically in the low 70s, upper 60s for most of it. Then we saw that huge spike. We also saw put call IV explode to the highest level over the past year, right? Past 52 weeks. Put trading's at a huge premium from an IV standpoint. The calls also usually signifies maybe a little too much panic out there, maybe a good time to be selling. Out of the money put spreads or puts to position to be a buyer on a further dip. You can see IV percentile still well above 50%, so selling strategies make sense. Here's a put IV look on a 120-day out of the money 30 delta negative put, right? We can see previously we looked at those two spikes, the run-ups and run-downs that marked lows in the stock. See that again here, and we're still above the previous earnings spike, even with this big pullback here. So IV still rather high, something to be taken advantage of. So trade idea is going out to June, traditional Junes, and selling the $70 put and hedging if you want by buying the $65 put or just selling the $70 put outright. So the stock closed at roughly 135 on Friday. The short strike we're looking at in June, the $70 strike, 65 points out of the money or almost 50% out of the money, right? You can sell that put spread, right? Sell the 70, buy the 65 for about 72 bucks, right? Risk $428, right? 5-point wide spread. So your risk is simply 500 less what you receive, or a return on risk of almost 17%. So able to get a very nice cushion, right? You don't get in trouble until the stock drops almost 50% from where it is now, right? After that big drubbing that we saw, right? We saw that drubbing on the stock not too long ago. It was at 450, briefly got near 100, has rallied here, but down some 2/3, right, from the highs here. So certainly a out of the money put spread with plenty of cushion, because that huge run up in IV means you can get further out of the money for a nice net credit. Makes a lot of sense. So hopefully provide some insight into how we go about identifying trade opportunities here and put them on. But as we always say, trading is about probability, not certainty. So make sure you position size accordingly, find the edge, and put on the hedge. So until next time, as always, here's to good trading.